So money can buy happiness, but here's the thing. It doesn't mean money itself will make you happy. But if you can earn your money doing what you love to do, and you can deploy it to either buy certain things, have choice, have freedom, have options, give to charity, like really change people's lives.
Today's guest is a 2 times best-selling author, a multi-millionaire investor, a multiple 7-figure business owner. He's an international speaker and a money mentor to thousands and thousands of people all around the world.
I don't want to make money. I want to work hard at building a machine that prints money for me.
In this episode, we created a masterclass for you all around the topics of finance and money to help you guys really level up when it comes to getting financially wealthy and getting your money right.
People get mixed up with being rich and being wealthy, but there's nothing more wealthy than being able to...
We talked about so many things that millionaires and billionaires usually keep completely secret, and we've brought all of it out in the open for you guys to learn.
It's very hard to get rich if you just buy...
We talked about so many things like the money myths that are keeping most people broke in life.
Money doesn't grow on trees, money doesn't buy happiness, but the truth is...
We talked about the most important investment all people should be making and what the very first investment should be. All around money and finances, you guys are going to absolutely love. So if you're brand new here, I would love it if you could go ahead and hit that subscribe button wherever you're actually listening to this or watching this episode right now. It goes such a long way, and it really does help this channel grow in more ways than you can ever even imagine. The bigger that we grow in here, the more subscribers that we get, just means one thing, that we get to grow this channel bigger and better and get bigger and better guests that can give you guys the value that you will wish you learned in school. Our whole intention of this podcast is to grow the #1 personal development podcast out there to teach you guys the tips, tricks, and attitudes of what it takes to live your dream life. The only thing I'll ever ask of you is to hit that subscribe button so we can continue on the way of our mission. So if you could do that right now, I'll be forever grateful. So now, without further ado, let's get into this episode and help me welcome my friend, Mr. Lloyd Ross. All right, Lloyd Ross, back on the podcast. Welcome back, brother.
Mate, good to have me back on.
Good to have you back on.
I'm so used to my own podcast. I'm like, welcome back to the show.
Yes. So you've been really busy since I think you were like one of the first guests actually that came on the show.
Yeah.
You've written a bunch of books now. You've got book Money Buys Happiness.
Yep.
Money Grows on Trees. You've got a new book coming out later.
Yeah.
You're the money guy. So I want to kick it off and actually just ask, what does wealth mean to you?
Yeah, good question. I think really what wealth means to me is total control over my time. That's really what it is. So people get mixed up with being rich and being wealthy, but there's nothing more wealthy than being able to choose or just have complete control over your own time. And that is true wealth, because how many people are super pumped with work, not inspired by it, just to get stuff and have stuff, but deep inside, like in their soul, they're just... they're suffering, from quiet desperation of like, I need to change this. And that's not wealthy. They might have a ton of money, but they're not following their definite purpose, so they're not enjoying their work. And also the way they're working is not giving control of their time. So they have no leverage. And so I think, being wealthy is complete control of your time to do what you want to do. That's it.
What are the keys then to creating an income that gives us more time?
You got to have a leveraged income. So most people's income is tied to their time. So it's called linear, and it just follows, like the more time you spend on something, the more money you make. But of course we cap out at 24 hours a day, and if you did that, you'd die. So you're stuck. And so the trick to it is to create leverage. So what should happen is the opposite. So the more money you make, it should come with less time spent on it, right? So it's like time going down, money going up. Mm-hmm. So it should be like this, and it's really like this for people. So the trick to it is to, rather than work hard for money, work hard to create a machine that creates money. That's the difference. So it's working a machine. Yeah. And that's hard, because sometimes people give you an offer. Like I've had people say to me, hey, do you want to come and do this and this? I'm like, I could make money doing that. But I'm like, hey, no. I don't want to make money. I want to work hard at building a machine that prints money for me. And that's the difference.
Interesting. I've never heard you say that. So you don't want to make money. So your focus is on building the thing that produces the money instead.
And I still fall in the trap. So like last weekend.
Yeah, give us an example.
So I was asked to do a talk and get paid. And it was in Perth. I was like,
it's like 6 hour flight.
Go there? Like it was for a friend, so that's fine. And I was like, well, it's going to be this much, and I'll do it. And I was thinking, I'll do that. And it's great. Like people would kill to do that, be flown over somewhere and speak and get paid. But in my heart, I'm like, Lloyd, this is breaking your own rules, because I was working hard to make money. Whereas the way I make money in our other areas is all from a machine, like a system that prints money. So we have assets that print money. We have 2 businesses that print money on repeat for us without that much effort. And so that's what I want to. I prefer to work hard at systems that create money.
Yeah. Okay, so one of your books, Money Buys Happiness, is funny because most people would think that's quite controversial. I think it's still one of the biggest topics. People are like, money can't buy happiness. I grew up being told that. Money will never buy you happiness. Yeah. And I think a lot of people did, and you wrote a whole book on it. So how does money actually buy happiness? Yeah,
it's a wild title. I love it because it just really, it irritates people into action, I think. So they're like, you know what? It challenges the paradigm. So that's the old saying, right? You grow up, money doesn't grow on trees, money doesn't buy happiness. So I grew up different. So I grew up with my dad saying stuff like, money's right. It's not everything, but it's right up there with oxygen. Or stuff like money makes you handsome. And like all these fun little quips. I grew up with that. And so I'm like, hey, money's totally cool. Like, because if you don't have it, you can't deploy it to change the world. Surely, because money makes the world go round, right? So money can buy happiness, but here's the thing. It doesn't mean money itself will make you happy. But if you can earn your money doing what you love to do, and you can deploy it to either buy certain things, have choice, have freedom, have options, give to charity, like really change people's lives, and if you do it if you know how to make it well and you know how to give it away well, it'll bring tremendous amount of joy to your life. So, and that doesn't say that they're not doing it correctly. They're playing the money game wrong, and that's just their attitude, and it's probably their soul, is what's causing you to be unhappy, not the money.
So what are the keys? Because obviously we run a whole fucking program together called Mind and Money.
Yeah.
So it's kind of funny. I'm asking a lot of questions that I know the answer to, but I want the audience to get.
Yeah.
Talk to us about, because I know this book specifically was a lot of actually going more internally, right?
Yeah,
mindset around wealth and all these types of things. So I want to break this down. What are the keys for people to, I guess, first when it goes, because somebody asked me the other day, they go, I need to work on my money mindset, but how?
Great, really good question, because it pops up so much. So people say, I need to work on my money mindset. And it's kind of irritating because I'm like, well, you don't really. If you do the other practical sides of money, like follow some simple steps, what you'll then produce for yourself is evidence that you're good with money. So like what's lacking from people's lives when they say, I need to work on my money mindset, is they're really saying, I need to work on my behavior, because my behavior is substandard. And I have low standards on my behavior, and as a result, I have low amounts of money in my bank account. It's actually not they're saying, I need to work on my money mindset. They're saying, I need to work on the terrible behavior that I've got. So, for example, if they're in chaos when it comes to their relationships, their health, and their work, like if they're slack, then I just say, show me your bank account. I bet this is terrible, because it shows up wherever they are in their life. So instead of working on your money mindset, I would say work on your behavior. Follow some simple steps until you see your money growing in your account. You see yourself investing a little bit and learning about money and being in control of it. And when you see those things, like a lot of my students, when they see that, they see it in 90 days. And then I have to give a lot of them permission to be good with money. They say, I still have to work on my money mindset. I'm like, hang on a sec. You've just done this, and this. You are great with money. Can you just say that and accept it? Oh, okay, fine, I've got to accept it now. Okay, yeah, I can do it. So you got to see evidence. And it's like, seeing is believing. And so the reason why people say they still have to work on it is because they're not seeing evidence that they are good with it. But as soon as you see evidence, your mindset flips.
Yeah, it's like, evidence is one of the pillars that builds a belief.
Yes.
Someone said to me the other day, I've just got this belief. I said, well, how do you know you've had it? Because I've got all this evidence that shows it. I said, well, that shows a strong belief. Because she's like, I can tell you all the times where I've been rejected. Because she had a belief about being rejected. I can tell you all the times, all this evidence. Okay, well, let's start changing the evidence then.
Yes.
It's going to start, one of the pillars is going to start to actually change the belief around it.
Yes.
So you say in the first 90 days, so what are these, what are more healthier behaviors? Like if people are looking at this right now, whether they think they're good at money or not.
Yeah.
Because I'm like, what I've noticed is I was very good at managing money and good at making money. Then I got really good at making money, and I've become worse at managing it.
Yeah.
Because I'm like, it's very in and out, and it's like, fucking,
I know what you mean.
Right? And it's an interesting sort of thing. So it doesn't matter where people are at right now, I think they can always learn more effective behavior. So
Yes.
what are the behaviors that are important?
Well, one of the things that when you do start making more money, it becomes less important to micromanage it. So like you can take your foot off your money neck, like you can take your foot off its neck for a while, but that gets a little bit out of control. Like it's a slippery slope. So I think one of the things I've always done, no matter how much money I make, and the one step I tell everyone if they need to do this to get their money sorted is to do an audit. Like truthfully, look at your bank accounts. Look at your bank statement. People don't even look at their bank statement because when you look at your bank statement, it's a personal development journey.
Yeah.
You're like, you're looking in the mirror of all your substandard behaviors and you know that that's you and you can't blame anyone for it. So the hardest thing I find is to get people to look at it. So it's like, look at your bank statement every month and do what's called an audit. So it's where you take your income and expenses on a monthly basis and you look at it and you go, okay, I spend too much on Uber Eats. Stop doing that. That's substandard behavior. You've got to look at the areas where it's your behavior that dictates where your money goes. So you've got to start to kind of like give yourself an uppercut every month because no one else is going to do it. So you've got to beat yourself up every month and you got to talk to yourself like you're a dick. Why did you do that? You're an idiot. Like you have to speak to yourself like that. Forget about the self-love stuff. You've got to give yourself some tough love every month because no one else will do it. So if you can do an audit every month, just for the first 90 days, that's the beginning of, okay, I know where I am now. I know what I have to change now. And the second thing is people ought to just begin with the basics, which is obviously doing the audit and then setting up a little emergency fund. Because if you don't set up your emergency fund, which is like, a few $1,000s, $3,000, if you don't have that, then every time an emergency comes up, like the washer breaks or this happens, you're going to credit. And every time you go to credit, you're on the credit cycle. You become a credit junkie, like on the hamster wheel, and you can't get off it. And so you've got to create your own little credit card, but it's debit, so it's cash. And once you nail that, and then you're doing your audit, and you can see a little bit of savings coming in, you can just start micro-investing it. And all of a sudden you go, okay, at least I'm doing an audit, know where my money's going. I can change my behavior. That's good, tick. I can see an emergency fund that I created, tick, not relying on credit. And then I can see myself doing some micro-investing, and I'm moving and putting my money to work, tick. So all of a sudden you got 3 things. And then you can start to shift this identity like, okay, I'm looking okay with money. And I know that's basic.
Yeah.
But
it's
don't
like
do the basics.
Like I don't do that. Well, I pay people to do that.
Sure. Fine.
Yeah.
So you do it.
But I know,
pay someone to do
yeah.
it.
But you do yours, right? So every single time we do an event together, I'm like, I should probably, but I do have a whole team that do it all. We sit down once a month, we go through it all.
Well, I look at I do a reconciliation of 2 of our main companies, just a monthly thing. And it's just to keep my finger on the pulse, And it's cool because I pick up things. I'm like, well, I need to cancel that. I need to do that. Because if I don't stay on top of it, a small hole will sink a big ship. And so I'm just attuned to just watching it on a monthly basis. I don't have to, but I just think it's a good habit to be in.
Yeah.
Yeah.
So talk to us about, because I know fear is a massive thing that stops people. The fear of losing money, it's the fear of what if I lose money? What if I get it wrong? So many people have so many things attached to money and what it means about them. If they have a lot of it, if they don't have a lot of it, they must struggle. And it's so connected in so many different ways. So what I want to know about is, let's park fear for a moment, okay?
Sure.
And I want to be able to make investing simple for people, okay? Because it is. So in order for someone who might be a little bit like they've never invested before because they're like, well, I don't know if I can do it, if I buy the wrong things or whatever, what are the simple keys for them to sort of understand it in a way that they could be not so frightened moving forward?
The fear does get created from lack of basic knowledge. So of course, if you don't have the knowledge to go into something, you're going to be fearful. Like for example, if you didn't know certain things about parachuting when you jump out of a plane, you'd be even more scared.
Yeah.
Because you have no understanding, right? But when you get a bit trained, you know some things and some statistics, you're like, okay, I'm less afraid. But I think it's important that, and we teach this at our event too, like there's no such thing as a fearless action taker. They don't exist. That's like, it just doesn't exist. Everyone is fearful a little bit when they take action. But if you can create some knowledge, it'll be easier for you. But the simplest thing to understand about investing is this. It's where you're taking money today that you've got and you're putting it to work to grow. But here's the thing people don't understand mostly. It's just that when you get rid of the money, your money's gone. You don't have the cash anymore. It's this weird thing people don't get. So when I invest it, it's what am I buying with that money that will grow? So if you can take the cash and you can buy a piece of real estate And over time, because of supply and demand, lack of land supply, it will grow in value. But your money's gone. You gave your money to the seller. You don't have cash anymore. So you've actually invested your money and that's disappeared and you own the asset. And the asset is what grows in value. Money doesn't grow in value. Money goes down in value by about 5% a year. So if we had cash now, it'd be worth 5% less. And not the actual cash itself, but it would buy 5% less of things because inflation, right? Inflation is where prices go up. So when you invest, you have to understand, well, what am I actually buying here with my money? Because you could invest in a pair of shoes and that has no return on investment unless they're a really rare pair of Jordans. You could invest in real estate. As long as it's in a good area, it goes up over time. So the asset grows. You can invest in shares, which is a share of a business. And as long as the business does well, that will grow. And then you can sell it later and get more money. So you grow your money by investing it into assets, things that grow in value and predictably produce income. And the only things that do that are safe generally are real estate, typically residential, and good quality shares in companies that are good quality companies. And then maybe your private business, right? Like we invest in our businesses. And so that's also an investment. And so I think it's in ourselves. So if you invest in yourself, you invest in a business, wonderful investment. And if you invest in shares, great, or real estate, great. But everything outside of that is like, it's too uncertain. You have to have certainty when you invest because, you know, money is, when you first start, you don't want to lose it. So it's just having that certainty, but understanding when you deploy your cash, it's gone now. So when you see your account, like if you invest in shares and you look at your account, that's not cash. That's the value of the asset you bought. And I think that's where people get a little bit unstuck because they think that, oh, my money's growing. No, your money's not growing. You've given your money to someone else. You paid that person to get the asset. So I think to simplify investing is like, what are you buying with your money? And will it grow in value? And will it produce a predictable cash flow to you? I think if you can do that, then you're going to do well.
What do you think about all the different types of things to invest in? So I interviewed someone one day. He had a couple hundred properties or something. I said to him, how do you get rich? And he goes, simple. You're either buying or you're not buying assets. That's it.
Totally agree.
He's like, to get rich, you buy assets. To stay poor, you buy liabilities.
Yeah.
But there's so many. We've got investing, we've got businesses, property, all these types of things. So in a world that might be so overwhelming for the person who might be starting, what's your advice? Not financial advice, but what's your advice on, I guess, picking their lane or discovering what is their lane that they should maybe learn more about to dive in?
That's a good question. I think picking your lane is important because I think Tony Robbins talks about his event saying, look, sometimes in our business mastery, I have to talk people out of getting into business because they're not, it's way out of their lane. Yeah. Right? So it's the same, it's called your risk profile. So the level of risk you're prepared to take. And not everyone's the same. So some people are just geared in such a way they should just be working for the government in an employee role and they should just keep it simple, for sure. But I don't think they're our listeners. So, you never know. They might be. But we're talking about getting wealthy, right? Yeah. So here's what I think it boils down to. And that guy you're talking about is 100% on the money. Wealth comes from assets. So like if you buy assets that don't need a lot of attention or your time, so call it real estate assets and pieces of businesses like a share portfolio, it doesn't require any management, usually. So that's great for wealth because it produces cash flow to you that's consistent and predictable, and it grows in value without you doing anything, which means you're buying back your time. And that's wealth. If you can get your assets producing more money than you spend each year, then you got unlimited time, and that's wealth. So here's where people go wrong and why they never get there, is because in their job, they're only saving 15 grand a year. Like, how are you supposed to go and buy a $2 million house or even a $400,000, $500,000 property? You got to gear up. Like, it's getting progressively more difficult to build wealth in property, for sure. You have to kind of, you have to do flips or options. Like, it's challenging. So what I think most people need to do in the beginning is, if you're only saving 15 grand a year, which is what I did, I was like, I'm not saving enough. You realize very quickly, you go, okay, well, I need to go and be able to make more money. So I need to get in some sort of business that I can add more cash, because if you're making 100 grand a year extra, you're going to buy a lot more assets and build up your wealth a lot faster than someone who's saving 15K a year. So I think anyone who's listening to this would be, if you're not saving much or your income's capped at say 60, 70, 80, 100,000, start a business. Like, it's the first important step of wealth creation. I don't think anyone ever got super wealthy, unless they got an inheritance, without being in business. So I'd say get the skills, start a business, and once your business is flourishing, carve some out and start buying assets that are diversified away from your business risk. Does that make sense?
Yeah. Talk to me about this risk. Is there, are these archetypes or something, or no? I'm not
they're
really.
not really archetypes. It's just someone...
Or is it like a range?
Well, it's like the propensity to take on risk is different.
Yeah.
So you're a high risk taker.
I jump out of aeroplanes for fun.
Right. So, and there's people who are like Travis Pastrana from Nitro Circus, makes you look like a old granny, right? So he's on one end, and then there's like, the people who put their kids in bubbles on the other end. So there's a spectrum of risk taking. But what people don't understand is that, like, it's risky to do nothing. So they think they're making a decision not to put their money to work and take that risk of losing it. But by doing that, they're actually setting themselves up for failure too. So it's risky to do nothing, and it's super risky to take massive risks that's going to kill you. So you kind of want to be kind of in the middle somewhere, right? Floating around in the middle somewhere. You got to take some risk. Otherwise, it's a risk in itself. So everyone's on a scale. That's what I mean by the risk. And so you can take lots of risk or not lots of risk, but those who are great at investing, like Warren Buffett and so forth, they actually deploy tons of money with very minimal risk and massive returns. So you can actually have less risk and higher returns if you know what you're doing. Yeah,
I do love that, because I think a lot of people only look at one side of the equation often. And same thing with, let's say little Bob, little Sally watching this, and they're like, I want to start a business now.
Yeah.
And they go, okay, I'm going to start today. First thing in business, I need to go and tell people about my offer. Fuck, but talking to strangers is scary. Yes. Now that's painful, that's fear, it's So then they don't do it. But they only ever look at that one side of the equation. Taking action is going to be scary, correct. Yes. However, they don't look at the other side of the equation. Well, what's going to happen? What's going to be the cost of inaction for 10 years?
Yeah.
Tell you what, that is much fucking scarier every single time. And I put something online the other day that the only maths that you should really be learning, probably not the only maths, but important maths you should be learning is actually the cost of your future decisions, right? And if people were to actually make proper decisions based off, okay, well, what's this going to cost me? Yes, but also what's it going to cost me not to do this?
Yes.
And you're saying, like, with the risk, like doing things is risky, sure. But I think the biggest risk of all is to actually do nothing.
Yes.
And a lot of people are only ever, they're biased to that.
Yes.
They only take a look at one side of the equation.
Generally, yes. And they don't, they're not, they think certain things are risky. Like, for example, you talk to people about shares, immediately they think it's risky. Because all they've ever experienced or seen from programming in their mind is Wall Street movies.
Yeah.
Or depictions of people jumping off buildings when they lose it all during crashes. That's the programming. That's not real. That's just one glimpse of one time. And so I say to people, look, do you think shares are risky? They say yes. I say, okay, interesting. So if you could own a company like Apple, wherever you go, they're looking at your phone, and it's a multi-trillion-dollar company, and it's got manageable debt levels and a great team. Do you think that's a good business? Yes. Would you like to own Apple? Yes. Well, why don't you buy shares in Apple? Oh, I didn't know that's what shares were. So they just don't understand what they are. So they think that that's a risky investment. Oh, Lloyd, if I take this step, I'm going to risk everything. And another way I look at it too is I said, look, if you invested it into an index fund, let's say an index fund like the S&P 500, which is the top 500 companies in North America, which are the best businesses in history, 500, and you can own a stock that has all 500 in one, and you think that's risky, what you're saying is you think there's a chance that the entire world will implode, and that's why you're not moving. So you're actually putting the world imploding ahead as a higher probability than saving your money. So when you explain things like that, like, I go, oh yeah, okay, I didn't know that. So this is where the knowledge part really makes a difference. Because most people will go out this weekend and spend $500 on alcohol, right? A lot of people. And that's a sure loss. That's 100% loss, right? Yes, you get the little bit of dopamine for a while, but that's all. You get a 0% return on that investment after your excitement and dopamine levels wear off. But if you took $500 and bought a piece of an asset, that can compound into the future for a long time. So I actually think that most people are investing already. They're just investing in the wrong things.
Yeah. I want to talk about the mindset of this, okay? Because everything's driven by mindset. What other So I'm really diving heavily into all the cognitive biases that we have in our minds, and it's really interesting of just how we're biased to so many things.
Yeah.
One of which being, which I think I've mentioned a few times, the sunk cost fallacy.
Yeah.
That, you know, there's been times I've been sitting watching a movie. Within 20 minutes, I'm like, this movie fucking sucks. 45 minutes in, this fucking sucks. 1 hour in, it's not getting better. But then I go, well, I'm not going to leave though, because we've already come all this way. We've already bought the popcorn and shit. Let's just fucking finish it.
Yeah.
We've already put all this time and money into it. Let's just finish it. And that is the sunk cost fallacy in play.
Yeah.
Going, well, my future decisions is based off how much I've done already. Well, I've already come this way. Let's just stay. But what the sunk cost fallacy says is we should go, when we made the decision, we thought it was the best decision, but now we have more evidence to show that that's not a good decision. So change our approach. And a lot of people do this investing. Apparently, a lot of people do it's dive and dive and dive, and they'll keep buying or whatever. So I know that that's one of them. What other types of ways of thinking or biases perhaps have you found, or I know Warren Buffett talks about a lot, is that you find that people get off track with or fucked up with when it comes to investing in the money game?
Yeah.
What's up, Dream Nation? Have you ever wondered how far ahead your life would have already been if you had got access to this type of content at a younger age? Look, this is why I need your help. I'm trying to build the #1 personal development platform out there to teach you guys the tips, tricks, and attitude of what it takes to live your dream life, and to bring the type of education that we all wish we had in school. This show only grows by word of mouth and new subscribers, so it would mean the world to me if you could smash that subscribe button right now, leave us a 5-star written review, or drop a comment below and share this episode with a friend. I would be forever grateful. All right, now let's get back into this episode.
These biases are huge in the investing realm, and a lot of investors are very good with self-psychology, and it's a real psychological game, right? So there's a few rules you got to follow when you're investing to avoid them. And I'm reading this really good book now. It's called What I Learned About Investing from Darwin. And this guy talks about how evolution in animals and so forth, you know, survival of the fittest and everything, can be applied to companies. It's an amazing book. And he talks about how he rarely takes buy decisions to purchase things because he wants to make sure it's really the right thing, because you don't want to suffer from these biases. And so you have to be very sure about what you're doing, what you're buying, right? So there's two big biases that stick out. One's called recency bias, and we're all afflicted by that, like including myself, which is what prevented me buying property. And recency bias is something that's happened fairly recently and you think it's going to repeat. And so everyone is like, and a perfect example of that would be, say for me, I came out of my career in my early 20s into the GFC, which is one of the second worst financial catastrophe in recent history. And I saw properties, especially here on two, drop by 50%.
Wow.
Right, 50. Now the new generation, so your generation who's 10 years beyond that, you've never seen real estate fall. And so your recency bias says real estate only goes up. My recency bias says actually we're going to have a crash. So our two biases are playing with us based on recent events, right? Yeah. And so you'll see this happen a lot where you'll see a stock go up and recency bias coming in like, oh, this went up, it'll go up again. So they try and repeat what happened in recent memory. That's why you won't see people invest in stocks after a crash, because recency bias prevents them from
except the wealthy.
Except the wealthy who are in control of their mind, they know, right? And so it's huge. Recency bias is the biggest. Now the other one is called home bias. And home bias is really interesting because it's, and I'll give you an example of it. It's where you talk to someone, they say, oh my God, we bought the most incredible property investment ever. Like, it's the best investment in our money. I'm like, oh, cool, where is it? They go, next door. So I'm thinking like, you've yeah, you know what I mean? Like, so it's home bias, so it's comfortable. And you see this with people who invest only in their own country. And so that limits their ability to go into the US markets, into China. Like, I'm invested in China. And if I suffered from home bias, I'd only invest in the Australian stock market. But that would be a big error because the Australian stock market sucks. So you got to be careful, you know. You don't want to let home bias.
There's another one. I forget what this one's called. Maybe it's called focus bias or some shit. But essentially the things that we're looking for, we'll find.
That's called confirmation bias.
Confirmation bias.
Yeah.
So it's like when people see on the street, oh my God, look up at that cloud. Look at that cloud, you can see a duck.
Yeah.
And you go, where? And then, oh, yeah, I can see a duck. Confirmation bias. So we're looking for the thing. We see a thing that looks like the thing, and then we're like, that's close enough. That's it.
Yeah.
I've noticed this when I hire people. So now I've noticed that because and for also my line of work, I find the best in people. I look for the potential. I say, oh, you're amazing. I look aside for the last 30 jobs you just quit this year. Now you're going to be great to work with. You know, and so I put things in place to avoid that. So now I have a team that'll actually go and vet. I'm literally hiring a new person this week. They've already interviewed 100 different people. They sent me the best 3. Yeah. Now I looked at the best 3. I looked at the applications. I looked at the video, and I'm like, which one do I vibe with the most? Yeah. Then I'm going to have a meeting with them. Once I give a tick of approval, my team are going to have meetings with them. Yeah. And then they're actually going to make the final decision. Because I'm going to say, yes, this person I think would fit the criteria, but you're going to make the decision. Because I've been proven that I'm going to look for I'm going to be like, no, this person's going to be good. And I've hired so many wrong people because I was like, oh, I was looking for someone exactly like that. I got him. Yeah. Then I was like, actually, that's not what I wanted at all.
Yeah. It's really interesting that, isn't it? So I think hiring people using disc profiling and stuff helps a lot because you can vet them based on their answers to questions or their work, you know? So the people I'll probably recruit now, I'll say, do this work first. And then I'll look at maybe hiring because you just don't know, right? Yeah. And you can never tell. But confirmation bias is interesting in investing because it's huge. It's a big part of it. Yeah. So, for example, let's say you buy into a business or a company, you know, in the stocks. Yeah, it's stocks or business, whatever it is, and it doesn't go so well. You're really only looking for evidence that it's going to, and so you're confirming your decision. Yeah. And what you've got to do is you've got to look at both sides of the coin. And I'm not overly sensitive as a person. I mean, everyone has a level of sensitivity, but I try and be pretty emotionless, if possible, when I'm buying into a business or I'm buying into a stock. And I know when I'm doing confirmation bias. So me and my friends will talk to each other and say, hey, here's some confirmation bias. And we send each other news articles that support our investing. So we say, here's some confirmation bias for ourselves. So we know we're doing it, but you have to look at both sides of it. That's why it's great to have a partner to say, hey, and I've got a guy with stocks to say, hey, can you this is my decision, this is what I'm doing. Can you just poke holes in this for me? You need to look at the other side of it. Because confirmation bias can get you in a lot of trouble.
But then this plays into another bias, authority bias. Yeah. And based off the source of the information, we will trust the source versus. So we will misinterpret the information coming to us based off if the source is authoritative. Yes. This is why when I run trainers training, I say to people, like, never become a fucking trainer. Yes. If you're going to spit shit, essentially, get up here and be very careful of things come out of your mouth because when you say it, it's now believable.
Yeah, because you're an authority.
People take it for gospel.
Totally.
So be very careful with the things you say because people come and look for you, and the same with the podcast. People hear podcasts and like, oh my God, I heard on a podcast. Yeah. Hang on, like, you know, like, and sometimes I've said things live and I'm like, actually, I fucked up that statistic. It was wrong. But then people be like, oh, they're going to tell everybody because I heard it on the podcast. Yeah. Actually, no, I fucked it up, you know? Yeah. So, but this is so important to be aware. Like, this is like the first thing we teach in Mind and Money is just awareness. Yeah. You know, it's like you can't intervene with a world you can't see. Yeah. We first need to become aware of how we're thinking. Yeah. And all these different things, because you just said, you're like, oh, I sent to my friend. Well, what if you perceive him as an authority, you might believe whatever he says back, you know? So then it's the paradox of it. Well, I'm going to poke holes in what he just poked holes in as well. Totally.
And I think if you're just aware of it, then it's fine. And I think that I was going to talk about the authority bias. Like, what's really interesting is people think that you are an authority because you speak about a topic for long enough. It's a weird thing how they craft authority. So if I'm looking for people of authority, it has to be based on results, not opinion. So I take a lot of authority. I'm open to experiencing a lot of authority bias from the major super investors in the world. So how I begin to look at what I want to buy is I go to dataroma.com and I look at the last quarterly reports of what all the best investors who have walked the earth and continue to walk the earth are buying. But I'm so aware of the authority bias in that I'm not just going to copy them and clone them without any research. So I start there, but I have to go through and do my due diligence of the company and understand it really well. And it has to be very compelling for me before I still invest. So I don't just go willy-nilly. Now I did that. And I did that with Alibaba when we bought Alibaba because Charlie Munger bought it.
And I remember you telling me, like, Charlie Munger bought it.
Yeah, he only buys business, like he's very patient and he'll only buy the highest quality businesses where he can see the longest growth.
He's the one that just died, right?
He just died. Yeah, he was 99. Anyway, one of the greatest investors who ever lived, Warren Buffett's business partner, and he's super clever. Now, here's the thing. Alibaba is a wonderful business. It's one of the great companies, right? But it was just mistimed. It was just mistimed. And it fell. It kept falling, and we kept buying and buying and buying. Now we're down a fair bit. But it was because the authority bias of Charlie. But I still did my due diligence. But authority bias got in the way a little bit because I would have bought it maybe a bit cheaper, personally. And I'm sure he would have too. But just the way I bought it, I was hit by that bias. But thankfully, it is such a high-quality company that will continue to print profits in the future. So I'm okay with it. It's just that snuck in. So these biases can sneak in anywhere, anytime. So what you say is perfect. Like, as long as you are aware of them. And if you have a checklist, like if you're going to make decisions,
so I was just thinking, like having a checklist.
Which biases am I, and there's this great talk that Charlie Munger did on, it's on YouTube. Is it the 25 cognitive biases of human misjudgment or something? Like he talks about human misjudgment. And he talks about these 25 major human misjudgments because he's a real student of psychology. And so I think these are very important to talk about when it comes to wealth and money and your own success.
So you've talked about at one point, parents putting their kids in private schools being a waste of money.
No, I don't think I said that, but
you were lured to.
Well, I did a reel that posed two positions.
Yes.
So I wasn't biased towards one. I just said, maybe I was a little bit biased with the numbers, but I was just interested in doing an experiment.
Okay, so tell me about the experiment of putting kids in private school. Okay. So what happens when parents put their kids in private school?
Okay, so I don't have children and I haven't made this decision, so I'm not coming from personal experience. I'm just posing.
You're putting your finance hat on.
I'm just posing an experiment here. So I went to a private school and a lot of the kids I went to school haven't had super successful careers or anything like that. Haven't had super wealth or haven't had, they've been some, but not others. And then I'm friends with others who have gone to public schools who are just like supremely successful. And so I just thought, is it really a precursor to success based on what school you go to? Because it appears to me that if you go to a school that's not so contrived in its rules, it's better. Okay? So I don't think there's one or the other, but here's what I did. I thought, you know what? How much does it cost to go to private school? It's like 20 grand a year. Okay? How much does it go to public school? Probably $1,000 a year, right? So it's like, well, what if instead of putting that money in there, you put, because how many kids have gone to private schools where they've just completely bellied up and had no money in the rest of their life and their kids have no money, right? So what if instead of putting them into private school, you took the $20,000 a year and you invested it into an index fund? Now, by the time they finish school, that index fund has built up over that period of 12 years to $400,000. So they either leave school with $400,000. Imagine giving your kid a $400,000 graduation present from a public school. Say, hey, go buy real estate. Go buy a business. You could buy a business for that prints money after that. And you can teach them business. And you're setting them up if they want to. But what if you just left it in the index fund? What if you said to them when they finish public school, hey, you've been going to school. I didn't send you to the private school, but I put the money away for you in an index fund. It's now worth $400K. Please don't touch it till you're 65. You know how much it would be worth?
How much?
$37 million.
$37 million?
Million.
Is that without adding any more?
Without adding, I think it's without adding any more.
Yeah, because 18 years old, compounded for that long.
I could probably work it out on my calculator. Yes, I'm pretty sure I stopped. Because the fees stop after that time. But it's reinvesting the dividends back in.
Reinvesting back in.
So I did. I stopped the payments because you're done after grade 12. And then you just let it compound. Because don't forget, they're 17, 18 when they finish school. Now 65, that's 55. So $400K does turn into that amount of money. Because you got to remember, in 1942, if you had invested 10,000 in the S&P 500, today it'd be worth like 57 million. So yes, that would be correct. 400,000 would easily get to 37 million in that time frame.
God damn.
So you think about that, like how many of our people we went to school with at 65 are going to have 37 million?
Yeah, probably none.
Right? And all you did was, instead of sending there, like, and I get that life isn't all about money. Like I totally get it. So it's not like, and I know that things can go wrong with that investment. Like people can get divorced and separated and I want to use it for this and I want to use it for that. And you could dissipate the 400K and that could disappear. But if you, theoretically, if you did that, your family would have 37 million.
You know, I like it, right? It's an interesting thing to think about because there's going to be people who are like, no, I went to private school. And it's like, this is not a
debate, it's let's just get unemotional for a second, look at it objectively, and just compare.
Yeah.
Because I don't know what we'll do. I'll probably fucking homeschool kids, to be honest, the way the schooling system's going these days. So I get them homeschooled, have a traveling nanny so we can travel the world. But what I would think about immediately, and then before I even say, I'm going to back it up and be like, I don't think it's possible to ever raise a kid perfectly anyway. I think because even we look at our mentor, David Wood, he's like the pinnacle of personal development. And he'll even say like, oh, my kids are still a little shit sometimes, Yeah. It's almost like a parent's job to fuck up the kids so they can figure out their own trauma and work on it.
They'll figure out the fuck up, right?
Yeah.
Yeah.
But so you look at, because what I would think about was I grew up with no handouts to me. I had everything I needed, nothing really on top. And I've learned how to be like, if I fucking want in life, I'm going to learn how to get it. So I've built this fucking machine that knows how to get shit I want. And I guess that is the thing, like, what risks do you think it has? Or let's just play for a second. What would you do? You guys have kids, you set this fund up for them. Now you have the potential risk at they're 18 and they're like, have no idea the value of money. Essentially, they've just had this 400k dropped into them. They haven't had that job yet. All these. Well, how do you kind of go? What would you do to sort of go about actually raising them in a way and educating them properly?
Yeah, it's so hard, isn't it? Because how do you know until you've walked a mile in someone's shoes as a parent how simple or easy it could be? So I think one of the things is that you wouldn't get to the end of your grade 12 and say, here's 400k.
Yeah.
Because you would be trying to teach them along the journey that you're doing this. So you'd be able to impart some wisdom to them. So you'd say, hey, this is an index fund. This is how it works. This is why investing is important. These are some great books that I read that helped me. So, and you bring them along. Like, that's what I would do. Now, some kids are open to that and some aren't, because kids aren't just automatically coachable and open. Some aren't, right? Like we said before, some just closed off. But if the child is open and coachable because you've raised them a certain way, then of course I'm going to, you'd want to teach him. I mean, I think about what you just spoke about. Like the hardships are creating lessons. But I think in Robert, what's his name, talks about this. He talks about, Dr. DeMartini. He talks about on one end you have entitlement, which is like over supportive, like the bubble kids, right? Too much support, it's bad for kids. And then too much challenge for kids is traumatic. So you have trauma and you have entitlement. And the whole idea is to have growth, which is right in the middle, which is where you craft some challenge that's a supportive challenge and let them fall over and do things for themselves. And then you have a level of support where you're educating them and you're giving them wisdom. Because the idea is not to give a kid 400k. It's to give them wisdom.
Yeah.
Right? And so I think I'd be doing that. But at the same time, I just see so many parents struggling financially to send their kids to private schools that they went to. So you think about that.
Yeah.
They went to a private school and now they're struggling financially to send their own kids to a private school. How long does that legacy go on for? Until someone breaks it, because wealth has got nothing to do with private school. It's got to do with how you handle money.
Yeah.
So I would like to give them wisdom and money. A little bit of, not a leg up, but I think showing them as an example.
Yeah. So I want to dive into something controversial. As always, you've gone and done your level 3. What do you call it again? Charter exam.
CFA charter.
Right. So one of the top.
I'm on level 3, so it's the final level of the CFA charter program. Yeah.
So.
What is that?
Yeah. So what is that? So only 25% of people actually pass it. So, I just want to give some backstory that you know what you're talking about with money, essentially. Okay.
Yeah. Fine.
So you know a shit ton about money, finances, business. Then we're going to this world right now with crypto. And everyone's like, Bitcoin, everything's online, it's the new technology, and the governments are closing down, and this. And so you obviously hate crypto. So talk to us, because I've had people on the show that have made millions in crypto, right? And this is also the thing.
Millions of what?
I don't know. Depends if they took it out. I don't know.
Millions of what? Millions of what? What are they?
Dollars.
Fiat currency?
It depends. Well, there's a guy in Sydney who's got the crypto house. He's made millions on crypto. He's taken out, bought a house, right? So there is some people.
So bought real estate asset, which is intelligent.
Yeah. But there is some people that I'm sure you probably couldn't agree. They have made money and they've done things with it.
Sure.
And then there's also a shitload of money. People have got no fucking idea and they've lost a lot of money. Yes. So what I want from this is for these people to kind of understand so they can make their own decisions, not just because a lot of people might and me included, I bought crypto because like, oh, he's buying, I'm gonna buy it.
Sure.
And then what I learned from that is what I actually learned from you was I'm not gonna buy any more shit I don't actually understand.
Perfect.
So why do you not like crypto? Let's start there.
You know, I mainly because it doesn't serve the world. It has no utility. And people say, Lloyd, it can instantly transfer money into. I'm like, so can wire transfers like $30. Like, it's not really solving any problems. And people will say, oh yeah, but the government's gonna. I'm like, the government's already controlling crypto. Like, as if the government can't just squash it. Like, it's very green to say that it's not controlled by the government. It's very naive. It's just naive. People just don't think the government can't just clamp it down. So that's not actually. It just doesn't have any utility. I don't see how it improves the lives of people. Does that make sense? So as if you buy a business, right? Businesses improve the world. Yeah, most businesses, good businesses do, right? So there's got a lot of utility. And housing does too, because if you've got shelter, at least it prevents you from dying in a storm. Like there's actual utility. So good quality assets are good for the world. And because of that, there's always high demand. Whereas cryptocurrencies, and I mean, certainly the coins outside Bitcoin have no utility. They're just there to propagate speculation and gambling. Crypto is as useful as casinos. There you go. And they're not useful. Casinos are just useless. Like if you're an alien and you're out of space and we're on this little planet by ourselves and we're trying to survive as a species, and you saw that we created casinos, like they go there knowing they're going to lose money and they do it and they rip each other off. That's all that's happening in crypto. It's just like crypto is just you and me in a room just moving this between ourselves. That's all it is. It's a group of people just doing that. It has no utility for the world. It's not good for the world. So that's why I don't like it. But what I've seen is the seductiveness of that. So I don't like it as much as I don't like gambling, because gambling is dumb, right? And the IQ of people who gamble is low, because you got to be stupid to go into a casino, because the odds are stacked against you. And trading anything is like that, because the more decisions you make as a human being, the more likelihood you're going to make a wrong decision. So that's where trading anything is a bad idea. But what happened to crypto is there's recency bias. So recently, crypto went from 0.1 of a cent in fiat currency to like $60,000. Huge increase in value from fiat standard. So now everyone's like, oh, but it's the best performing asset. The recency bias got everyone by the balls. And what happens is the seductiveness of everyone knows one friend who made a ton in crypto. Yeah, but my friend's brother's cat just dominated crypto. All of a sudden that one outlier is now skewing the statistics, and it FOMOs people in, and they don't know what they're doing, and they get caught up in a scam. And to be frank, most of these crypto houses like huge frauds.
There's been heaps of them,
huge frauds, and so people are losing money. And I see that side of it. How many people come to me and go, Lloyd, I lost 60,000 in crypto trading. Lloyd, I lost 60,000 in crypto. It's like, what? Why did you buy that? And even when they know financial education, they still get sucked in, right? So I don't like it because it just totally is ineffective, but at the same time, it's not a predictable way to build wealth. Not predictable. It's very unpredictable. Doesn't produce cash flow, so it can't give you any wealth. It can't give you control of your time, right? And what's really interesting is this. They measure it in fiat currency. So the day that crypto is measured in crypto, then I'll say, okay, it's an accepted currency. Great. I'll still use it to buy houses and real estate and businesses.
Yeah.
Does that make sense?
Yeah.
So even if it is a currency, I can give crap. I don't care if the currency is toilet paper. I don't care if we're trading tables with each other. It's irrelevant. I'm still going to use the tables to buy businesses, just shares, and real estate, which is a productive asset. It doesn't matter what it is. And that's where people are getting stuck. They don't know if it's currency. They don't know if it's an asset. They have no idea. And if the final straw is this, if I ask someone to explain it to me, they can't.
Yeah.
But you should be able to explain a good quality investment in one sentence. It should be very easy, but they can't. So I just steer clear of it and just don't play the game. It's a non-winnable game. Yeah.
It is an interesting thing. It's, because like the crypto and stuff, I still have crypto actually. But I was talking to Jesse, who had on earlier, who's made, that's why I said like 25, he's made millions. But one thing I've learned from it is the whole thing with investing is, number one, every investment has some risk. And then number two is depends how much risk you want to play. Yeah. And it just depends on how much we want to go at. And then my personal opinion, number three, matters on how curious and you are about that thing and how much you like it. So for example, I don't like reading businesses and shares and shit. You like that. And we've talked a lot. I'm like, my assets I like to acquire are businesses. Like not in shares of businesses. I'm like,
Sure.
I just want to go set this business up, go and start another one, set this one up,
Yeah.
go and invest in another one here, take half of this one and merge it. And that shit gets me off, you know? So like, and I'm biased because if people say, hey, what's the best investment? I'm going to say you, because I have a personal development company. It's changed my life.
Yeah.
I'm also going to say business.
I agree with that.
And you'd probably say, well, let's look at some shares. Reese would probably say property, right? And it depends, I guess, if where most of us are biased on what's helped us get to where we are.
Totally. There's a lot of recency bias in that too, and there's agree and home bias. But the thing is that I agree with you because, like, it's very hard to get rich if you just buy real estate and stocks on a small income.
Mm-hmm.
And it's very seductive because it's very passive. So that's what's good about it. But the truth is you should invest in yourself and a business first, and then you should make a ton of profits and then buy real estate and shares after. Because what happens with shares is this: when you build your business up big enough and it's so big you need the public's money to expand it, you then go, oh, do I list this on the stock exchange? Yeah, because you get all this access to capital, which is what businesses need to expand. And all of a sudden you go, oh, I'm now an owner of a business that's listed and I got shares. Oh, now I see what shares are. So you actually you probably do realize it, but if you love businesses, you would love shares too, but your wealth is not great enough to move the dial just by buying shares.
Yeah.
Whereas when you transcend private equity, which is what we're in, which is private equity, when your businesses get to the point, like Alex Moses is going through this, he's doing a lot of private equity stuff, okay, where it's privately held bigger companies. But when you transcend that and you can't move the wealth dial far enough, you'll run out of small businesses to buy.
Yeah.
And you'll do what Warren Buffett does. He says, well, I can't spot any good small businesses to buy. Oh, there's a good big business. I'll buy a chunk of that and I'll buy shares in that business. So if you love business, like, tell me your favorite company. If you could own any company in the world.
Oh, probably Amazon.
Okay, Amazon. So you love Amazon. Why do you love Amazon?
One of the biggest. It's very diverse. It's sells fucking everything. They own the whole market share of online retail, essentially.
So they own 40% market share in the US of online retail globally, right? So there's all these things you love about it. Now, if I said to you, if you and me could start Amazon today, would you start it with me?
No,
but like if it didn't exist. So if Jeff Bezos came to you and said, hey, guy, I heard on your podcast we should invest in ourselves and start a business. I've got this idea, the internet, it's growing. I think I can sell some books. I'm pretty good with it. Morgan, you've got, 50 grand. Do you want to invest with me? Would you do it?
I'd be open to the idea based off meeting Jeff Bezos.
Sure. So you'd be open to, because you said you love businesses and partnerships, right?
Yeah.
So you said yes.
Yeah.
So I would too. I'd be like, yeah, that sounds cool. Jeff's a really smart guy. This sounds great. Here's my money. And you do the same. And we can apply our skills to that. So that's private equity. That's what Alex Hormozi is doing.
Yeah.
And that's what you and I do on a smaller scale. But what happened was it grew so fast, it was such a good business, that it then got to the point where it needed capital to grow. And you can either do two things at that point when your business needs to grow. You can either borrow money, which is called debt capital, or you can borrow cash from public investors called equity capital. That's why they call them equities. So then it grows and it's listed and you and I can buy shares. So the truth is that Amazon is still one of the most amazing companies and will continue to compound and grow. So the reality is if you love Amazon, you can buy it. So you go in and buy it as a business owner. So it's where you step back from developing businesses and you go, oh, my wealth is now so great, I can't even do that on a big enough scale. I need to buy whole businesses. And what I've learned is it's actually easier to buy a business than start one.
Yeah, it's kind of I'm not keen on starting new ones anymore. No. I'm keen on hitching my wagon onto, because I've got my main thing is everything we do, and I'm more looking for unique businesses that I can actually acquire pieces of and throw into the wheelhouse of everything we do. So the plan I've got the next 5 years is gonna be fucking mental. How everything's just
So if your business gets big enough to list on the stock exchange, you're a shareholder, would you invest in shares?
If it got big enough would I invest in shares? I do invest in shares. I'm just saying it just doesn't excite me.
Yeah, so I think that's where you go, if you look at it from I'm buying a piece of a big business, when your wealth gets so big, you go, man, do you want to buy whatever with me? You go, fuck it. Cause
I'd probably just go buy a really big shit.
It changes, I think, over time.
Yeah, for sure. Because I wouldn't play with just making a little bit of profit here.
You get tired of it because you're like, well, that's not worth, the juice is not worth the squeeze. And I think that's what juices Warren Buffett up. He's like, where can I take my 150 billion? Like, he can't start he can't start a business with it.
Yeah.
He's like, where do I deploy the 150 billion now? And that's where you're like, oh, what an interesting game to play. And that's where he operates at. So I think for us, we just haven't transcended the private equity yet.
Yeah.
That's all. And I think it just changes as you go. You know?
Okay, so I give you $10,000 today to invest. What do you do?
Start a business.
What business?
I would start, well, it's recency bias stepping up, but I'd start like an educational coaching business online. I'd run Facebook ads to it. I'd do what I've done. I'd write a book, offer coaching, and I'd scale that up. And then I'd take the cash off the table and start buying businesses. That's how I do it. I did start that for 10 grand, by the way.
Your current
the education business.
Education business?
Yeah, $10,000.
Yeah, that's true. Yeah. Okay.
That's what I do with it.
How about $1 million?
$1 million? I would buy a business for $1 million.
Just buy no business?
I'd buy a business. Yeah, I'd look for I'd probably borrow some money and buy a car wash or something.
Car wash. Yeah. What, for the people, I think I know what you're going to say. I'd be interested if you say anything different. Let's say Bob or Sally listening to this podcast, I got $5 grand. That's all I got in the bank.
Yeah.
Where should I invest it? What's your answer?
Hard. Hey, that's a tough one. God, 5,000. Well, tell you what we did do too. We built a cool network marketing business for $1,000.
Yeah.
Right. So I think, if I had $5 grand, I've even done a reel on this. I'd probably put $1,000 into some sort of like shares as an index fund, just to say I've started my backup plan. My plan B is to just put money away into an index fund and let that build up, so I've got something to fall back on. It's good to have a plan B, okay? And people talk about burning the boats. I'm like, well, sometimes it's good to have a little dinghy around the corner.
Have a dinghy on the back.
So I do that, and I take the 4K, and I go, you know what? I'd started network marketing is really easy to get into and really affordable. And I think most people need to do that because they lack business skills. And you and I both know that we learn a lot of our business skills in network marketing. So network marketing is like $500 to start up. Then I'd take the extra 3 or 4 grand I had left over, and I would invest it into a mentor or a coach to help me grow and scale that network marketing business up to 100 grand a year. Once I got there, then I'd branch out to an educational coaching style business, and I'd continue to invest in a portfolio until it gave me enough passive income, and then I'd look to acquire big pieces of businesses.
I love it. A little different. I would take, this is the different risks. I would take it all and put it right into education. The right education, depending on so let's say, because here's the thing, because based off the law of income.
Well, I put 80% of mine in it. I'm not too far off.
Oh yeah, I guess. Well,
I bought a vehicle first, and then I put the education.
I actually did that. I was 21. I had no money. I actually went and got a credit card, and I paid to start my network marketing business, and I bought a laptop. Yeah. And I was like, cool. I've put
got the vehicle and got the equipment.
Yeah, I was like, I got myself in debt. First goal, get out of debt.
Okay.
And it was my first credit card I had. It was like $2 grand or some shit. I was like, I'm gonna fucking get out of this now. Fuck that. Get out of that. And the next goal. But the law of income will get paid in direct proportion to the need for what we do, the need for what we do, our ability to do it, and then the difficulty it is in replacing us. So my goal has always been, how can I learn the skill set? How can I acquire the skill set or the mindset to become even better, to have an even better ability to do the thing that the world needs?
Oh, I totally agree. Yeah.
Because people can. If people want to make more money, instead of looking at such grand scheme of thing, you got to not put the cart before the horse thing. And let's say if Bob's working as a laborer in a factory, he could literally give up his weekend, spend $500, get a forklift ticket for one thing, invest in education, learn, increase skill set, probably get an extra $5-10 an hour now. New skill set, you can do more things. You can go and learn more things on the side. This is why my whole business education, you got education business, it's because I've invested nearly $300K. All my first investments was, I didn't start actually investing capital into other things other than me until a few years ago. And still now, all the investment is going, we're doing property and stuff, but it's going back into business. But it's because I know myself, my capability to print more of it because of how much I've learned. Yeah. I've learned so much in business and mindset, skill set, communication, sales, negotiation, because I invested in courses and mentors and coaches. So I get a lot of people I got $5 grand, what should I do?
I agree.
Bro, invest in you because $5K ain't doing anything.
I agree. But you did start with a vehicle. Because you would have been incentivized to get educated unless you had a vehicle that didn't work. So you buy a vehicle.
No, right? I'm not saying I didn't. That's exactly what I did.
So you buy a vehicle and you go, this vehicle is fine, but I suck at driving it. So I'm gonna invest in a driving instructor.
Yep.
So I think how you did it is how I would do it too.
Yep.
And I think that's why you did it so well, because you had this vehicle. You're like, okay, I got my vehicle, can make me $1 million. How do I drive this? And so it incentivized you, I think, to go and work on yourself. And now you've just got this.
Definitely.
You know, a lot of you're a self-learner. Like, I think that's one of the keys to wealth creation is you got to be a self-directed learner. That's probably the key ingredient. If I could choose any ingredient for success, it's someone who is a self-learner, because you're self-taught. Like, if you want to learn something, you go and pay someone or read something or do something, and you go, I know how to do that, and you go deploy it and teach it, right?
Yeah.
You do it, get the results, go teach it. And that's the success ingredient. Like,
boom. I love it. Mate, where can everybody find you on social media? Get your books, check everything you're doing. You got something new coming out soon, so where can everybody find you?
Yeah, go to Lloyd James Ross is my Instagram. You can go check out my latest book, Money Buys Happiness, at moneybuyshappinessbook.com. And we've got a podcast, Money Grows on Trees. And so you can go listen to that. It's free. It's on Spotify. And we have a new book coming out. The launch date is 1st of August, still at this date. And it's called Time Rich.
Boom.
How to stop being busy and start getting wealthy. So keep an eye for that.
Love it. All right, mate. If you were to go back to your 18-year-old self and give him,
don't you
give him 30 seconds of advice,
I'd say to him this.
What would it be?
All right, I'd say, man, no matter what happens, you got this. You're going to do it. You're going to do it, and you're going to craft a cool life that you love. You're going to meet a great woman. You're going to get married, and you're going to love what you do. Despite the challenges, you're going to find your way. So just back yourself like you're going to, and you're going to nail it. And I'd say that to him because I don't want to change my life. I love my life, so...